Folks, welcome to the Small Account Club session for Saturday the 11th. What we're going to talk about today are a couple of bullet pointed topics that I want to talk about. One is, how is our week? We're going to talk about our week. Dealing with a rough week. What is our business? I'll talk about that more in a moment. That has to deal more with a understanding what your business is, and if you have a rough week, did you segue away from your business, from your core? And I'll talk about that more in detail. I'll be a little bit more articulate, I hope. Planning your week. We're going to do that today. We're going to plan our week. I'm going to talk about growing wealth slowly, and that is of particular focus on the small account. And we'll talk about the whys behind that. What should logically happen versus reality? That's the market that we're in right now. What should happen, meaning the economic environment that we find ourselves in. One would think that with all the bearish news out there, the bearish events that are on the horizon, debt crises, bank crises, that the equity markets should go down. But when they don't, that's the reality. And we got to put our big boy pants on, and we need to focus on what the reality is. So we're going to talk about all these things. So to begin with, as we see people segue in, if you're watching this on the replay, make sure to, excuse me, to join the 30-Minute Chart Club come January 1. These are going to be private live streams by invitation only. We do that so that we have a small group, that we do not get spammers. Sometimes we get spammers, and I could address people's concerns, their questions, etc. And that way we have a very engaging session, and it's very constructive. So it doesn't cost you anything. Link below, 30-Minute Chart Club, and you get the invite. Right now they're going to be public. We want to build that list up, and it's building up. And I'm going to shut it down at some point in time because we want to keep it very, what's the word? Intimate. Intimate is what we're looking for, and somewhat exclusive. So it's free. Join it. I'm going to be going over a couple of charts. If you're new to technical analysis, I have another link below. My 5-part video tutorial, my top 5 favorite candlestick patterns, linked below, and that's free. So take advantage of it. I'm not selling anything here right now. What else? I'm waiting for people to populate in, so that's why I'm kind of stalling here. Let's begin. Let's talk about our week. Now, we have multiple portfolios. I have a portfolio where we just invest long, and we stay long. We keep some cash on the sidelines, but I'll hedge from time to time. I don't do much trading in it. That's my long-term vehicle. So we have the larger account. That's my trading account. That is mostly an options trading account. I'll mostly sell options. What is our business? We primarily sell options, but we will swing trade. And then, of course, we have the small account. On the small account, which is right here, this is the account I deposited $20,000 in on August the 11th. Since that point in time, we have grown it 8.63%. We did have a little bit of a drawdown. We didn't take a loss, but the market went against us, but we bounced back, and now we are at the highs since we opened up the account. So on the month so far, we're up nearly 11.5%. So for an account that's only $20,000, around that range, that's a respectable return, a very respectable return. And right now, I don't see a lot of reason to change our strategy. I'm going to open up the portfolio in a moment, and I'm going to show you our position. And here it is. It's only one position, and that is SCDG. And we are up on it right now, nearly 42% in less than a month. I would like to take profits and close this out, but a couple of things have to happen, or a mixture of things have to happen. Right now. So this trade here, what we did is we sold a strangle, a deep out of the money put and a deep out of the money call. The options are very, very expensive. We're seeing a lot of time decay. This position, by doing absolutely nothing, nothing. I look at this maybe once a day. It pays us $43.26 per day. Per day. So let's get our calculator out. And if you annualize that 43, and that includes weekends, times 365 equals, that's $15,782 a year. A year. And that is what you call theta decay, time decay. And that is our business, is time decay. We want to be the casino. We don't want to be the guy sitting there at the blackjack table hoping to get a hot hand. No, we don't want that. We want to be the casino. We want to be the house, because we know every once in a while the market may not go our way, as it did not go our way back here, but we rebounded. Right? We didn't make a lot of changes here. We rebounded. And sure enough, we're back at the highs of when we deposited the money here. I don't do much with this account, but the key is identifying your opportunities and sticking with it. The worst thing I could do right now is close out this trade. Why would I want to give away $43 and change and go into a higher risk investment? It doesn't make sense right now. It will make sense soon as time decay evaporates, as we near expiration. If we get IV crush, that means implied volatility gets crushed. It goes from mid last week, it was in the mid 50s. Now it's at 48%. As that draws down, the value of these options is just going to evaporate. And then we need to go shopping for other opportunities. Now, you may be saying, wait a minute, you have another nearly $15,000 that you could trade with. Why not open up an additional position? Well, the key to surviving with a small account is you never want to use all of your capital. You want to use roughly, sometimes I'll go down to 35%, but roughly 50% of your capital. You want to have your net liquidity at 50%. That way, if things don't go your way, like back here, you have capital. You're able to maneuver, manage, and then you go out of a bad spot and you recover very, very quickly. The however is that if you use your capital up all at one shot, well, you risk a margin call, and your broker becomes your senior partner. You can't manage your trade. You may have to take a loss rather than managing it, rolling out in time, rolling out your strikes, whatever you want to do. You can't do it because you've tapped out your liquidity. So that's the reason why we've been able to grow this account in a volatile market of late. And volatility has come out now. So we're going to stick with this trade for now. And this type of trade here is, I don't know if anybody out there cooks. I cook. And for the longest time, I always like to cook scallops. I'll be cooking them tonight. And this is the reason why I brought up, it's an analogy. So when I first started cooking scallops, I always wanted to have them nice golden brown on both sides. And for the first couple of times I tried it, I just couldn't make it happen. It would just be white. And I couldn't get them nice golden brown. Finally, I did the research on it. And the outcome was that all you need to do is do nothing. Let it sit in the same hot spot, and over the course of a few extra minutes not being touched, the golden crisp will appear. And sure enough, to this day, that's exactly what I do. Every scallop is golden brown. And I draw that analogy because the worst thing that we could do right now with this trade is to close it. There's too much meat left on the bone. I could still profit $650. We could see the vast majority of that on Monday. Why? It's because, again, it goes back to implied volatility. So right now you have the IV ranking of 48%. That means that the IV percentile of the options is telling you it's very expensive. If this drops down to the 20% range, I'm out. The value of the options, even with 35 days left to go to expiration, are going to decline in value dramatically once you get that IV crush. Now, if the IV does not collapse by day 20 of this trade, meaning 20 days to expiration, I'm going to close out the trade. Why? The reason is that what we want to do here is we want to avoid any type of loss to the account, right? So right now, our strikes have what you call a 5 delta. The call side is close enough to a 5 delta to call it a 5 delta. The other one is a 5 delta. What does that mean? I have a 95% probability of these options expiring worthless. That's a great set of odds. I can roll this position. I can tighten up the strikes. And that's certainly a possibility of me doing that and rolling out the trade to another month or so. But I don't need to do that right now. I'll let it go for a few extra days and then roll out. The reason why we don't want to go beyond the 20-day mark is that this cone here, right? You can see how we narrow down as we come closer to options expiration day. Well, what happens is that you run the risk of a gamma event, or as I like to call, this is my technical terminology. This is ownership, copyright protected of the contrarian trader. I authorize you to use it as you see fit. And what I like to call it is, rather than a gamma event, I like to call it a rip your face off rally. And one that makes you very, very humble because you had a lot of profits in that trade. And all of a sudden, because of a news event, that lotto ticket of a few pennies worth of an option cost to an option buyer turned into a big profit for them. We want to avoid that. I've seen it before. I don't want to see it again. So day 20 will be out of this trade, possibly before that, but we want to avoid, as we go into day 20, any type of gamma event, a rip your face off rally. Let's say hello to people. Sean, welcome, brother. Good to have you. Okay, so that's our week for the small account. Now, for the larger account, not such a good week. And I like to be transparent here because you have a lot of people that can go on YouTube and make claims. It's all BS. A lot of it. Some people are good. I don't want to cast aspersions. So I have here on the whiteboard, I was going to put this on here a couple of times. In fact, I am going to do this a couple of times. Okay. So what is my business? My business, by and large, is selling premium, like we did with SCDG. Right, but this isn't our small account. I have a larger portfolio, and I have a target to make X amount of money every single day in theta decay, just as I discussed here, but on a much bigger scale. I'm not going to share the numbers because I don't want numbers to get out there and people are like, I can never get shoulder pain. I just left the gym. I can never get there, or I don't want people thinking that I'm boasting or anything like that. Don't worry about the numbers, worry about the behaviors. So last week, and usually we're very, very consistent, but last week was a week that I had put on long trades the Friday before on the gold mining stocks, gold, and they appeared as though they wanted to rip up higher, just as the rest of the stock market looks like it's going to rip up higher moving forward. But I was sadly mistaken, and those trades went against us. Now, those are long trades. Those are swing trades, multi-month trades. Now, our options writing business because of the volatility midweek. You had the horrible bond auction that came out on what was it, Thursday, I believe it was. I said, you know what? I'm raising capital here. I'm going to take some of our capital off the table, and I want to raise our net liquidity because I was worried, and I was predicting on Thursday that we get a bearish reversal bar on the candlestick charts, and we got it. And so I had a short position on as a hedge, not a big one, and the next day ripped up against us. So I took a lot of my theta off the table, not a lot of it, a good amount of it off the table. And so that brought my daily cash flow down. Also, the swing trades went against us. Our short, which I was profitable on Thursday night, was on Friday afternoon. I was down on the nat gas trade, the gold mining stock trade, down. It was not a good week. I eked out a profit on the week, but just barely, and I missed my target for how much I wanted to make for the week. I have a goal, certain amount every single day, and I didn't reach that goal. Therefore, to me, even though I made a profit in my mind, I took a loss because I didn't meet my goal. That's me beating myself up, and you need to be able to understand that that's not the best of ways of thinking, because you can make bad decisions when you think that way. You could do, as I took some notes here. I really don't come prepared for this. I just go off the top of my head, but I wanted to put some notes down. What is your business? Coping with losses. Don't get cute. Don't double down. Don't double down. A lot of people like to do that. Don't take your hedge off, and because you bet that the unsustainable rally that we saw on Friday can't continue. It can continue. It can continue. No revenge trading. Don't trade out of anger that you're ticked off at yourself, because what that's going to do, it's going to be called the baguettes. A buddy of mine taught me this word, the baguettes. This begets that. So if you took a loss or you didn't meet your goal and you're beating yourself up, shut the computer off and take a walk. Go to the gym. Do anything other than trade. And so the decision that I made is what I usually do. If I don't like my positions, I go to cash, especially over a weekend, because if I would have stayed short over the weekend, then I would have been thinking all weekend long, not about positivity, about how I'm going to position for the new trading week. No, I would be obsessing on my current position, kicking myself because I didn't take action, and hoping for a gap down on Monday versus a gap up, and I would incur more of a loss if we get a gap up. So we closed out our short trade, and that's fine. So now we have a tremendous amount of capital to now, as I like to call it, when we take options trades off, meaning when we sold options, we take them off. Now I could reposition for the new reality, and I could adjust a new risk reward profile, because the equity markets appear to want to move up higher. So rather than doing a lot of strangles, meaning selling a deep out of the money call, selling a deep out of the money put, I'll probably do a lot more put selling, and that's that's a bullish trade. Or I could do a ratio strangle, meaning sell twice as many puts versus calls. That way, if the stock market continues up, I make money on the put side and I have a hedge on the call side. So this is what we plan on doing in the new week. The question is, what are we going to trade? What's going to give us the biggest bang for our buck? Now, I didn't close out all of our shorts. I did keep one short on, and it may seem very, very counterintuitive because of the price action that we saw. Let's talk about the markets for a moment. We're just going to talk about the Qs, and I'll talk about Microsoft and any other stock that we see that's interesting going into the new trading week. We'll try to keep this to about an hour. And if you have questions related to what we're talking about here, I would encourage you to ask them, please, because I'm here for you, and I could talk all day long. Don't wait for a pause, because I'll just keep talking. Put your comment in or your question in, and I'll address it. Okay, so the week closed out last week with a huge move up higher on the triple Q names. Now, This is a daily chart. Now, on a daily chart, you can see we discussed this last Saturday during our last episode number 7 of the Small Account Club, how to use the squeeze. And basically what we saw last week, and all this chart here, this indicator here, is simply this. Bollinger Bands are within the Keltner channel. Bollinger Bands are in black, Keltner channels in gray. Now, just because you get this setup, which is usually doesn't happen, it rarely happens, and it implies that you're probably going to get a huge move in the underlying equity, in this case, the triple Qs. The question is, which direction is it going to go, up or down? All right, that question was validated on Friday. On Thursday, I thought it was going to fire down. That's why we stayed short. I didn't go adding to shorts because I was a little bit concerned, but I thought that we were going to break lower, and had we broken lower, I would have added to shorts on the confirmation, but that didn't happen. We went the opposite direction, so you got to put your big boy pants on and say, okay, I'm wrong. Time to reevaluate, go to cash, think clearly, don't obsess over the fact that you didn't take action, or you got to hope now that this very, very bullish chart gives you a brief minute where you may act if it gives you a pullback to a support level where hopefully you're wise enough to take that trade off the table. I don't want to play that game because that is getting cute. The market has a very, very good way of teaching you a dire lesson if you try to get cute. So if you're wrong, deal with it. Adjust the trade, eliminate the trade, whatever you got to do. Manage your portfolio. And the reason why, on a percentage basis, the small account it definitely did better on the week than our larger account, is because I didn't touch it. Because our position was so solid. I chose it so well. And I took advantage of a very, very good equity that had options that were very overbought. Nobody wanted the stock, so I was able to sell the puts. Then as the stock rallied, I was able to sell the calls. We did it perfectly. Why touch it? Remember, how do you brown a scallop? Don't touch it. You have a good trade, let the time decay work for you. That wasn't the case. We didn't have that opportunity as much in the large account. But our goal is to reestablish with a better risk-reward profile. So I mentioned earlier that Microsoft, we have a short position on and a lot of people out there watch this on the replay going, what the heck's wrong with this guy? Microsoft ripped up higher. Why are you holding on to a short? I'm not short the common stock. I sold what you call a call spread, a deep out of the money call option. And then I bought a deeper out of the money call option to act as my insurance policy, just in case I'm wrong. Now, we're kind of extended here on Microsoft. We have about another 30 days to go until those options expire. So what I'm going to do is, on any retracement, any pullback on Microsoft, I'm going to sell puts. And that's going to be, in essence, a synthetic long of Microsoft. And I'll keep that short on to the long side. I'll keep that short on as well. And I'll have time decay on the call side and time decay on the put side. And all the while, the put side is acting as an insurance policy on that call side. So it's all about managing your risk. I didn't want to sell the puts on Friday afternoon, because if you take a look at how Microsoft closed out the day, 15-minute chart, we were pretty extended. Let's go to an intraday view here. It's more pronounced. Bear with me one moment. Again, this is not scripted. And if you think I should script it, give me feedback on these things. I'm just doing these ad hoc. So you can see that on a 5-minute chart of Microsoft at the close, we were leaning into the third standard deviation Bollinger Band. You're not supposed to be there. All right. So normally you're going to get a rejection once you hit that resistance level. Now, if they spike up Microsoft on Monday, I will probably short it outright as a quick scalp. I will not hold it overnight unless, of course, it collapses, which I don't think it's going to do. But I'll scalp it. And if we pull back, then on that weakness, that brief weakness, I'm going to sell puts and help protect the opposite side of my trade on Microsoft, and will generate more theta decay. Again, what is theta decay? That is time decay, as noted here in this column of our small account, and that pays us $43.26 per day. This one position, and we don't touch it. I haven't. Once a day, I look at this. Okay. What else? So that's Microsoft. Let's go back to my notes here. What do I want to touch upon? All right. So we talked about our week. We didn't lose money. I just didn't hit my goals. Therefore, I'm beating myself up. I'm getting over it. You know, when, I'll cry about it a little bit. Then on Monday morning, it's rah, rah, rah. Okay. So we'll be back in business. In fact, tomorrow night, Sunday Night Futures Live, we will be back in business. Don't forget, like, subscribe, hit the notification bell. We go live 6 p.m. Eastern Standard Time every Sunday night, every Thursday night. Join us. Sean, Bob, in the weekend commentary, you mentioned LABU possibly going up because the QQQ was expensive for small traders. Can you explain that if you get a chance? Yes, great question. I love that. Thanks, Sean. So yeah, so for those not familiar with LABU, and I need to go back, Sean. Bear with me one moment so I can silo the potential trades here. So what we want to do is, what is our business? Our business, by and large, is selling premium. So in our small account, which is primarily what this show is about the small account. I'm not going to buy LABU in the small account. I may buy LABU. I own it. I may buy more LABU in our larger account as a swing trade. I may sell premium, meaning sell options to generate cash flow in the small account, in the larger account. So because that's our business primarily, is selling premium. The question is, are we going to get paid enough premium to accept the risk? So we'll take a look at the chart from a swing trade perspective. We'll take a look at the chart from an options perspective, and we'll take a look at the IV ranking from an options perspective to see whether or not is it worthy of us getting involved with selling premium here if the options aren't expensive enough. They need to be expensive because we not only do we want time decay, we want IV crush. We want IV to come in. Now, LABU has been beaten up quite a bit, so we just may have a good amount of IV, making it worth our while to sell some premium. So let's talk about it. Matey mate, salute to you. Salute. Okay, so let's talk about first LABU as a potential swing trade. So that's just you're buying the common stock. And it's fine to do in a small account, but you probably don't want to do both. I want to go in a small account as I'm building it with high probability. If I buy a stock right now, it's 50-50. It goes up or down at best. Right? In all probability, the weakness that we've seen on LABU, the path of least resistance is down. The bias is that if we buy it now, it's probably going to get a little bit weaker. So me personally, rather than doing an outright purchase of the shares, I would rather sell puts if I want the shares, if I want them, because then I average down my basis cost. So we'll do the math on that. But first, let's bring up the chart. Let's take a look at it. I did speak about it on the week ahead commentary members that is posted already in the members area. If you're not currently a member, we have a 14-day free trial offer. Take advantage of it. Where's LABU? I probably just scrolled past it 5 times. There it is. All right. So on the week last week, and this is what Sean is referring to, is that on the week last week, and I spoke about this on Thursday night, Stock Charts Live, that LABU had broken out the week before last. Last week it had pulled back, and technically it closed back down in this trading range. You know, it's right there, right there, right? You could argue that it held the breakout. It's all how you draw your lines for the most part. All right, so if I'm 1/fraction of a centimeter off here, it would still be a breakout. So we're not going to read too much into it. What I'm going to look at here before we leave the weekly chart is, how does momentum look? Well, it looks as though momentum is to the downside, lightening up. You don't have that selling bias as much as you did. And the stochastics are beginning to hook up. Does that in and of itself make it a buy? A nibble if you're going to buy the common stock outright. If you're going to sell puts, it could quite possibly well be the right time to sell the puts, because all you're doing is reducing your basis cost by selling premium. All right, so I'll work the trade out for you in a moment, and I'll enter it in the dashboard. If you want to do a print screen, you can do a print. Excuse me, not on the dashboard, on my trading platform here. If you want to do a print screen, you can do a print screen. So now let's go to a daily chart, LABU. And on Friday, they took it down yet again. However, they reversed it to close at 274. 275 is the point that we wanted to see it close above. Momentum on a daily time frame going the wrong direction. I don't like that. We may hook up here. RSI already have, but it is down below 50. I'm not loving that. I'm not going to be a buyer yet until the stars are in alignment. I want to make sure that we don't gap down next week and blow a low, because that means that, well, we did break down last week. Now we have a continuation breakdown, and we could quite very well go to new lower lows on the year. And we don't want to buy a stock like that unless it's deeply oversold, meaning RSI below 15 minimum. So, and at historical support, which there is none on LABU now. So, me personally, I'm not a buyer of these shares right now. But what I want to take a look at is IV. Again, IV ranking. Are the options expensive, and will the volatility revert to the mean? Meaning, if the long-term average for LABU is to have a 20 IV ranking, and at current, what is it at now? It's at 48. Oh, that's just SCDG. It's at 85. That's beautiful. That's beautiful. So I'm a seller of options. Sean, thanks for bringing this up. I'm a seller of options here on LABU. So let's war game the strategy that we want to employ. So I'm not going to be an options call option seller here. I think I just want to sell puts on LABU. But we'll war game it out. So ideally what we're doing on these options is that we want to take advantage of that expensive option, right? So we want to go far out in time, because once IV crush happens, it happens across pretty much the entire complex, no matter what your strike is, especially the nearer dated 45-day and younger options. Those will really get annihilated. So we don't want the November. This is your gamma event risk. You buy a lotto ticket here. LABU triples, or not triples, they rip it up higher. That's a rip your face off rally, and option writers do not like that. We want to sell premiums. We want to get paid for doing nothing, right? We want to sell those premiums, and we want that stock, or in this case an ETF. We just want it to sit there and do nothing. Up one day, down the next day, a whole lot of nothing. And the IV comes out because all the speculators are like, it's not doing anything. I don't want it anymore. I'm going to sell my options. And then we want the time decay. Right? And we just get paid, and we're just happy-go-lucky because we're not doing anything. because all of your work is up front. We're doing that right now on a Saturday. So what we want to do here is I want to go out. By the way, there's going to be a reverse split on LABU. I'm not understanding these options right now. 28 days, November's. I'm confused. Everything's out of sequence here. Why is everything out of sequence? There we go. Okay, better. That was weird. Okay. I'm looking at the 42 days to expiration. The shares closed at let's call it 275. These are in 50-cent increments. Are these premiums right? Yeah, they look right. All right, this is not look this the $1 strike here on the, although it is right because these are calls. I want to just see puts. Okay, now this looks better. So the shares closed out the session on Friday at $2.74. Let's make the assumption that we're going to open up where we closed at $2.74. We could sell, if we want the shares, we could sell a 250 put and receive a credit at the midpoint of 22 cents. So let's do the math here. That's nearly a 9% return on capital. Now, if you think about that, and for 42 days, 9% return on capital. And plus, if we want the shares, we close at 2.74 minus 2.5. If we sell the 250s and they're assigned to us, meaning an options expiration date, the shares trade close down below $2.50, we're obligated, unless we roll the trade out before options expiration, we're obligated to accept those shares. The however is that we get the shares 24 cents less than if we bought them on Friday at $2.74 because we sold the puts. Add to that we got paid $0.22, and that brings our basis cost reduction by waiting and selling puts from $2.74 down to basically it's a discount of 46 cents per share on LABU. I'll take that all day long. So that's the trade I like here on LABU. Now, do we want to sell calls here simultaneously? Maybe. We'll take a look. So I want to sell the put. I'm going to add a leg here. Now, I don't want to be as aggressive with the call side because right now, if I sell the put, this has got a 32 delta. What does that mean? It's got basically a 32% probability of being assigned to me. As an option writer, if I don't want those shares, I'm not using that strike because I want my odds to be 80% or greater. That's how risk averse I am in that account. 80% or greater that I'm going to make money. I want to be the casino, not the gambler. However, I want these shares. So I'll do the high risk trade of selling a close to the money put option, but I'm not going to do that with the call side because I don't want to short this stock. And if the shares are called away from me, that means I'll be net short on the following Monday morning of the stock. I don't want to be that guy. So what we're going to do here is we're not going to go anywhere near the money. We're going to go as far out as we can go that makes sense for us to catch. And it doesn't make any sense here to accept this risk. We're going to get paid a nickel. It makes no sense to sell calls here. None. So I would just sell the puts on LABU. I would eliminate this. And the only reason why I'm not doing that trade on the call side, it's not paying me enough premium to get far enough away from the share price at current for me to feel comfortable with the trade. You need to be able to walk away from the trade, even though it's got an 85% IV ranking. If you can't do that, this is not your business. You can't be greedy because as the casino, our risk is unlimited, theoretically unlimited. So we can't enter a trade unless we have all stars in alignment. So that would be the trade I put on here, Sean. I like that trade. And you could even put an insurance policy on it, even if you don't want the share. You could sell a 250 put. I don't know if this is going to really make sense. This is mispriced. This is not going to fetch 25 cents at the midpoint. These are very illiquid. If you can buy a $1 put at a nickel, I mean, I don't think it makes much sense. But that's a way to put an insurance policy on here. Obviously, it's going to reduce your base, your cost that you paid on here, or the premium that you paid. So if you want the shares, it makes no sense to put on that insurance policy. So I would avoid that. I would just do an outright sale of the puts. Just be aware that you are going to have that reverse split soon. Okay. What else do we want to talk about? I want to take a look. How much time do we have? We have a little bit of time left. Let me go back to my notes. All right. So planning our week. So we have a whole lot of cash. I mean, if there's one thing that gets me excited about having a bad week is that knowing going into the new week, I got a ton of cash I have to redeploy. So I need to go shopping. So in the small account, I don't need to do much there. That's going to pay us. I'm probably not going to do all that much this week, but I can do stuff in the larger account. So the first thing I always like to do is I always like to go into my extreme oversold scan. And I look for names that are beaten up, that have a chart that is just an utter disaster. The key is you got to make sure that they don't have an ongoing concern issue, a la WeWork, which went bankrupt. Who's the other one that's declaring bankruptcy? Another company came out last week. Not Groupon. Groupon got beat up. It'll hit me in a moment. But had horrible earnings and ongoing concern issues there. So we want to be careful that we're not getting involved in one of those situations. Now, I'm not familiar with this stock. So the first thing I like to do is when I look at it in a beaten up stock, as I go over Yahoo Finance, Freight, I just take a look at the numbers. Does it make sense? Am I worried about ongoing concerns? Meaning, am I worried about the stock going bankrupt? And I look for a couple of things. Number one to me is debt. What's their debt look like relative to cash on hand? Cash, they have a lot of cash. They also have a lot of debt. Their debt to equity is pretty big. Pretty big. Are they making money? Can they service the debt? They're not really growing revenues. Billion-dollar company. Very, very volatile. Beta is a measure of volatility. Any number above 1 is considered volatile. This is 1.76. Also, what I'm looking for here is the number of shares short. That gives me my catalyst. What's my catalyst? What's going to send these shares up higher dramatically? And that would be a short squeeze. But you need to have a high number of shorts. So what I like to do is I take a look at the numbers of shares traded on a 3-month time frame per day. This is a very lightly traded stock, 252,000 shares per day. And then I take a look at the number of shares short. I divide the number of shares short into, the 3-month average daily volume into the number of shares short. That gives me my days to cover. A lot of people use short interest. I don't use that. I think that's a dumb way of calculating a short squeeze. If you have a stock that has, in this case here, 5.5% of the shares held short, that sounds like, wow, it could be a good short covering rally. But in reality, it's only going to take 2 days to cover the short interest. That's not that big. So not a huge short interest here. So I'm not that excited. And the other question that you need to ask yourself is, am I going to get paid enough premium to put the trade on? ALGT. IV percentile, 50%. Okay. For stock that's this beaten up, I would like to get paid more for my risk, but it's okay. Then you need to have good markets. What does that mean? You can't have zero bid and then a 250 ask on an option. That's not a market. You need tight options ranges. So we'll take a look at a potential trade here. And on this trade, with a delta, or excuse me, of a beta, a volatility ranking of 1.76, that's very, very volatile. So I'm a little bit reluctant to go selling calls here, because unlike with S&P 500 stocks, this company could get bought out overnight. And I'm naked selling calls here. What if they get offered? Suppose I sell a 60 call here and somebody comes in to buy the stock at 65. I just took a massive haircut. So you're not really worried about that by selling puts, because usually you're going to get paid a premium for buying out the stock. So this stock would probably go for 60, 65 bucks a share. It's basically called goodwill. You're going to get paid a premium. They're not going to come in and offer $50 when the market's saying it's worth $57.28 as of the close on Friday. So let's war game it out. They only do monthly options. That tells me the markets are probably pretty tight here. If they did weeklies, it probably wouldn't be tight. So that's okay. So I'm looking at a put, because I want to sell puts here definitely. The shares close at 57.28. I want to do maybe a 10 delta. I want a 90% probability of making money. So what I could do here, if you don't keep a journal, start keeping a journal, folks, of your trading, because it pays. Trust me when I tell you, it pays. I'm actually going to do a print screen here. And we're probably going to trade this, Sean, on Monday. So I would be looking to sell a 45 put. But the question is, are we near a support level where I feel comfortable with opening up a trade, or is the stock going to continue lower and I could get a better premium if I waited for the stock to finish going down? Well, we want to do that. So let's pull up a chart. We'll go to Trend Spider first, and we'll see what the automated trend lines have to say. And we're not going to use a daily chart here. We want to go higher level view. As always, monthly view. No support below. Quarterly view. Okay, that gives us a better picture of where we have support. Because when you sell premium or sell options on an oversold stock, it's the same thing that we do when we buy a stock that's deeply oversold. You got to do it at historical support because you want buyers of like mind that are going to step in at prior support, and they're going to help you. They're going to, because they want to buy at that support level. You should be buying. Don't fight the big guys. They're dumping right now. So we want to wait until this stock hits historical support. And we're not that far away. So support level number one at $59.71. That's in the rearview mirror. And believe me, folks, a few weeks ago when this stock was getting annihilated and traders were looking, saying, oh, there's no way that this stock could go down any further, they were wrong. So our downtrend is clear. It's defined. We're not ready to put this trade on yet. We want to see more damage here. So the name of the game is wait for a retest at a bare minimum $50.42 to buy the stock. Even better, $39.07. Don't think it can't get there. That's what these guys thought back here when they were buying it after this big drawdown. They were buying it here saying, oh, it can't go down any further. Somebody had to be the buyer up here. Look at them now because they bought wrong. They bought undisciplined. That is not how we play this game. Our game is that we do our research on the weekend when the markets are closed, because that way we don't do impulse buying. We can plan, we can strategize, we can chat about it, and we will wait for support levels to get hit before we act. Mate, we were gone. I don't even think their charts are active anymore. So that's Agilent. So members, expect to trade on this one this coming week. How much time do we have left here? We have 8 minutes to go. So Agilent is one that I like going into the new trading week. Let's pull up another one. iRobot. That's a household name. Very oversold. Nice. Now, a lot of people out there, and this is why I call it the contrarian trader. A lot of people are out there saying, oh my God, this guy's out of his mind. I made my business on trades like this. Nobody wants it. Therefore, I love it. So what we want to do is the same thing we did with Agilent. And folks, we're using TrendSpider, 35% discount code below or better. They may have that Black Friday sale still on. Link below. Get taken over there. Automated trend lines. It's awesome. Awesome tool. Take advantage of it. I use it every single day. IRBT. Again, a quarterly chart of IRBT. We broke support already. So where do we have support below? That's in the rearview mirror. Wow. $21.36 a share, IRBT. Just because it's a household name doesn't mean that it can't go out of business. So we do our due diligence all the time. Again, rinse, wash, repeat. Debt. What kind of debt do they have? They have a lot of debt relative to their cash position. But it looks manageable. It's not in excess of 100%. Quarterly revenue growth, they're dropping, wow, by a third. No wonder why they're getting beaten up. But they are profitable. It looks. No, it's not. They're not profitable. They're not profitable. Number of shares short, 256,000. Okay. So here's an opportunity. Here's a great opportunity is that I don't see any ongoing concern issues here, meaning I'm not worried about a bankruptcy imminently. And the number of shares short are nearly 3 million. Divided by equals. That's nearly 12 days for the shorts to cover their positions. This is setting up for a rip your face off rally. There is no way on God's green earth am I selling calls on this stock. No way. Even though the chart looks like death, there's no way I'm selling calls. Puts, I will. So let's do it. Let's price it out. Let's war game it. I want to do a deeper dive from the quarterly chart down to a monthly chart for a moment. Indulge me for a moment. Now, if we rally back to recapture this prior support level, that would be at around, I'm going to create alert here. What did I say? 12 day. And we'll keep this active for a couple of weeks. I also want to know when we get down in this range here, this is that extreme range, the low end of these trading range. And believe me, the shorts will hold. They will hold. And I want to put some sensitivity on here. Touch, bounce, breakthrough. I have my microphone between my keyboards and it's kind of screwing me up here. Okay. And again, we'll keep this active. We'll go a little bit longer. All right, so we're good here. This range here in blue, that's where we want to begin accumulating. Or I would do two things here. I would definitely sell puts, and I would accept the shares. We're gonna war game this out. What do we close at? 28.60. Matey, funny how I rolled had a green candle on the chart. Yeah, they had a beautiful run here. But everything went up, during 20 to 21, everything went up. But now they've taken out already the lows of the pre-pandemic. All right, so let's war game this. Let's play. We know our support level. Let's call it $23 per share. I don't know if they're going to pay us the premium to even touch it right now. This is annoying. Okay. All we want are puts. Yeah, you could do something here. We want to check on the IV ranking. I bet you it's big. Not that big. 43%. Decent premiums. So the shares are closing out. Let's war game this out. Okay, let's talk about what we're thinking about doing. The shares closed out today on Friday at $28.60. Are we willing to pay that? No. Why? Weak stocks tend to get weaker. So in all probability, we are going lower. And you may be saying, wait a minute, Bob. Whoa, 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 whoa. Technical analysis for dummies told me that when a stock has an RSI that goes down below 30, you got to buy it. This one has an RSI of 15.53. It can go lower. It can go lower. We are not at historical support yet. So am I willing to put some risk on here by selling puts? Yeah, I would do it. I like the fact it's got RSI 15.53. Would I buy the shares? No. No. Because what you need here is what you call a bullish reversal off of historical support. We're not there, and we don't have a bullish key reversal. What's a bullish key reversal? One of my top 5 favorite candlesticks in that 5-part video tutorial, link below for free. Take advantage of it. This is a bullish key reversal right here. And look what happened. Could you imagine that you sold calls to a call buyer and you did so back in May of 23? And let's say, oh, I'm going to be very, very careful here, risk adverse. The shares are trading at, let's call it $32.50 per share. There's no way this stock is going to move up to resistance, about $45 a share within 2 months, 3 months. This is money in the bank I'm going to make here. Hit a high of $51.20. Am I selling calls here? No way. No way. I'll sell the puts, though. That's the discipline. I'm sure I can get paid some good premium. Not going to do it. Not my trade. So here what we're going to do is we're going to look not to sell a 28 strike, not to sell a 25 strike. No, no, no. We want more. 22.50. That's even below where that support level is. In fact, this is almost $1 below historical support. I can get paid here by selling to open 10 contracts at the midpoint. That generates $450 that gets deposited into my account today. And immediately I start earning theta decay, time decay. Now, granted, this trade is probably going to go against me initially. Why? The shares are weak and they're probably going lower. That's okay. I know that looking at this chart here, that this downtrend with RSI at 15.53, while we can go lower, it's unsustainable. Volume, though, is still telling me there's still institutions out there that are dumping this stock. I don't want to fight these guys. So I'll sell puts. I will not buy the stock. So that's the game plan moving forward. They're just two. Agilent, IRBT, two great trades you could use in a small account, and you can start generating profits. I would not buy these stocks now. We are not at historical support levels. Don't do that, please. I beg of you. If you're interested in selling premium, different story. I would leg in. I probably wouldn't go with 10 contracts. I would probably just go 5, tranche number 1. Then the next day it goes down, say another 50 cents, sell another tranche of 5 strikes, get paid a little bit more premium. And then as we really approach that strike price of $23 and change, that support level, then I would just get very aggressive, if not buy the shares outright by selling puts or just purchasing the shares, one of the two or both. So that is the week that we plan on, a couple of trades we plan on doing this coming week. Did I touch upon everything? And before I shut down, if you have any questions, let me know. I'd be more than happy to answer them for you. Oh, so what I just did here is I just showed you how to grow wealth slowly, right? We're taking advantage of time decay on stocks that have a high probability of rallying very soon. May not happen Monday, may not happen Tuesday, but 2 weeks from now, they're not going to be on this oversold scan. They will have rallied, just the way it works. So now, I'll probably talk about this in greater detail tomorrow night. In the markets, we saw thank you, Sean. Appreciate it, pal. Thank you. What we saw was a market that had every reason in the world to go down. It didn't. I'm not the guy to come to and say, how do we trade the short side here? You don't trade the short side here. You simply don't. You don't do it. The market said it wants to go up. Yes, we're running $1 trillion a year in deficits. Yes, our debt to GDP is unsustainable levels. Yes, inflation is unsustainable. I can keep going. Wars breaking out. The government's war against its citizens here in the United States. All that. Stock market bearish. A government out of control like a drunken sailor. The stock market wants to go up. I don't make it up. That's how it was when I got here. It just took me a long time to not fight the trend. Even though I'm a contrarian, I understand that if you fight the trend in its early stages, you're going to have your head ripped off. So don't think too much about the economics of what is going on. The markets are saying right now, they're pricing in lower interest rates. Are they right? Are they wrong? I don't know. I'm not that smart. I think that yields are going to go up higher because the bond market told you last week. That's the reason why the stock market went down on Thursday. The bond auction did not go well. There were very few buyers for our bonds at the rate that we wanted to pay. They demanded more. That means higher yields, not lower yields. So while we may press up higher here, the minute that the dollar takes off, the minute that the yields take off again, we're going down like a ton of bricks. We're not there yet. We will get there, but now is not the time to be thinking short. Now is the time to take advantage of opportunities that are out there, and there are plenty of them. We just went over 2 of them. In fact, 3 of them. Microsoft. I'll be selling more puts there. I'll be selling puts. I don't have any puts. Selling puts, that's a bullish bet on Microsoft when it gets a pullback this week. We got to trade the market that we're given. We can't trade the market that we want. But I wanted the stock market to continue lower on Friday. Didn't happen. Boo-hoo. Take your loss, move to the sidelines, reestablish. Right? You didn't get your way. Now come back stronger, better, and have a better week next week rather than fighting the market. Maddie, thank you very much. Appreciate that. Thank you, sir. I'm assuming you're a male. Alan, thank you very much. Appreciate it. Thank you for being here. All right, folks. Everybody have an awesome remainder of your weekend. Thanks for being here. Like, subscribe. You know the deal. Don't forget about Sunday Night Futures Live, 6 p.m. Eastern Standard Time. If you're on our email list already, whether it be the whatever email list you're on, the Small Account Club or the 5-part video tutorial, my top 5 favorite candlestick patterns, you'll get an alert at around 5:15 tomorrow night when we go live. Don't worry about getting alerted. If you don't want to join those email lists, like, subscribe, hit the notification bell, get notified of when we go live. We do this every Saturday now. And don't forget, in June, we go these private live streams. So to get the invitation in January of 24, enter your email address, Small Account Club. You'll get the invite. Again, have an awesome remainder of your weekend. Hopefully, I'll chat with you tomorrow night. Members, don't forget the weekend commentaries in the members area. And have a profitable trading week. Be well. Take care.